Hi traders, my name is Gary Fichardt, coming to you with a video here around the Trade It Forward initiative. And giving back to the trading community, I've decided to go ahead and put together a short video that's going to describe to you exactly how you can trade all year through with a trend trading strategy. Yes, if this is the first time you've ever heard that trend trade strategies only last 30% of the time because the markets consolidate 70% of the time, well, maybe this is the reason why you haven't been profitable with a trend trading strategy. What I'm going to show you in this video is how to be able to use a gearing up, gearing down approach that can help you become more profitable and also trade with trend trading strategies right through the year. So with that being said, let's go ahead and get into the actual details of what this is all about. Alrighty, traders. So we're looking at the chart right here, and I've got a daily time frame. Now, very, very importantly, you have to know that in trading trends, it's very easy to be able to make money when the market is trending up and down. But the problem is when the market goes inside consolidation, it is a very, very difficult way to make money. And so how we're going to go ahead and do this is we're going to go ahead and draw in a trend line. And so if you look at the market trending up right here, it's very easy with a trend trading strategy to follow this trend. All you got to do is trade it bottoms to the tops, and so forth. But what happens when the market goes sideways? And like I said, the market goes sideways 70% of the time. So what do we do when the market goes sideways? Here's a very good example of price moving sideways, right there. Here's another example as price goes ahead and moves sideways as well. Now, as a trend trader, we make good money in a trend environment. All right, in a trending environment, we make good money. But the biggest problem that a lot of traders have is when the market goes sideways, like it is right here. This is where you struggle. This is where traders really struggle to make profits. And so, in order for us to make profits in a consolidated trading range, we have to identify the trading environment. And how do we do that? Well, if price is moving sideways, then what we need to do is we need to identify where the tops and bottoms are of that sideways range, and then trade at the bottom and the top of that range, but on a lower time frame. Right, that's the key right there. Now, you probably knew this, but you just didn't know how to apply it. This is what we're going to go ahead and do. We're going to go into a gearing down approach. And a gearing down approach would mean that we're looking at a large time frame. The markets are moving nice and trendy, but now the market moves sideways. And so if we take a look over here, and I'm going to move it down to a 1 hour time. And before I do, I'm going to go ahead and measure up the range from the top to the bottom right here. And notice that it's about 360 pips deep, right? We've got a 360 pip range that we can trade. But if we're going to be trading on a trend trading strategy that's built for a larger time frame, guess what? It's not going to make money. It's going to have some problems because we're not breaking out of that resistance or support level because it's range bound. So what you need to do is you need to go into a gear down trading approach. And by going into a gear down trading approach, you now can trade the trends with inside consolidation. Check this out. We're going to go to the lower time frame. Right? So we're going to go down to a lower time frame right here, and we're going to go ahead and gear it down by simply going ahead and removing this out the way. Oh, let me do this. And I'm going to grab this right here. I'm going to plot it in on the chart. And when I go down to the lower time frame, I'm also going to go ahead and put in a vertical line right here, because this is when we go inside consolidation, right? Consolidation comes from that range. That's the range. That's the box there that the market was moving sideways. And if you take a look, it started off around about the middle part of December, I believe it is. And it ended up right here towards around about March. Now check this out. If I go ahead and go down to a lower time frame, and I'm going to go to a 30-minute chart right here. I'm going to compress it, go back a little bit so I can get to those ranges. There it is there. That's the range that you've got. In fact, it's just sneaked out of the bottom right here. Now check this out. If you look at the market now on a 30-minute time frame, check out how the market now offers you a trend going up, a trend coming down, a trend going up, a trend going down, can you see how we can identify these channels and trade these channels going back and forth between the ranges? Here it stayed, here was a little more consolidated. We'll talk about that in a moment. But there was the next trend right here. And then the market went ahead and broke out in this direction right here. So the most important thing to understand from this is that whenever you get into a situation where price is ranging between tops and bottoms, you need to go ahead and make sure that you identify the condition. All right, identify the trading condition. Once you identify the trading condition, then you can go ahead and identify how you're going to go ahead and trade it by gearing it down to a lower time frame. Now you could also go ahead and gear it up. But in this video, we didn't talk about gear down because that's the one that traders really struggle with, to be able to move between different time frames. And so by going ahead and monitoring a larger time frame to identify the bigger picture, because clearly traders, we need to know what the bigger picture is, right? The larger time frames control the smaller time frames. But I've always said that it's the smaller time frames that help us identify the turning points of the larger time frames. So who is really in control? It's almost like my wife and I, right? I'm the one who says we do this, this, that, but really who's in control? Because most of the time I'm end up doing what she asked me to do, except I feel like I'm the one saying let's do it. But I think she's more in control than I am. And that's the same way as the markets, right? The bigger time frames thinks they are controlling the smaller time frames, but in fact the smaller time frames are really helping us identify these turning points to drive traders to buy off these levels and push the larger time frames in that direction. Okay, a little complicated, all right, but it's all going to come together right here. So let's take a look right here and see. So if we look at the market setups on the larger time frames, we can see that there's definitely opportunity. Now, in this range-bound trading period, take a look and see the opportunity. If I take the tops and bottom right here, we're looking at about 347 pip range, or at least a trading opportunity. Then going down again, we've got another 350. Going back up again, we've got another 350. So if you look at this right here, in this range of 350 pips, you had 1, 2, 3, 4 sideways, 5, and then 6 going down right here. 6 trading opportunities that were worth 350 pips each. All right, what is that in dollar value? That's about $1,800. All right, sorry, 1,800 pips. It's 1,800 pip opportunity between the tops and bottoms of the range. So this is my advice, and this is my suggestion for you in 2020, is that don't be stuck inside a trend trading strategy if you know and understand that price on the larger time frame has moved in a range. Because if it has moved into a range, you have to go ahead and make sure that you as a trader identifies the condition, identifies the environment you're trading, find the tops and bottoms, gear it down to a lower time frame, and you can use the exact trading strategy you used on the larger time frame to trade, to go ahead and focus now on the lower time frame and use it to trade the tops and bottoms. You'll find yourself making more money than trying to stick with that trend trading strategy on that larger time frame, because that's where traders that are trend traders get totally beat up. You have a great trading strategy, all right? It's great in a trend environment. So find the trend environment on the lower time frames, and you will find profits that you'll be looking for. Thank you, traders, for watching. And if you've enjoyed the content of this video, please make sure that you go ahead and subscribe to my YouTube channel, as well as go ahead and like, comment, and share this video. You can also hit me up on Facebook, Twitter, and Instagram. And don't forget to click the notification button when you subscribe to the channel, because I go live all the time. And when I do go live or post videos, you'll be notified of exactly when that happens. I'll see you in the next video.